Pat Keon, a senior research analyst with Thomson Reuters Lipper, and I'm here to speak to you about fund flows activity for the week ended Wednesday, July 19th. Let's start by taking a quick look at the week's market activity. Both the S&P 500 and the Dow Jones Industrial Average were up for the week. S&P managed a gain of 1.25%, while the Dow appreciated 0.5%. The markets took strength from a combination of weak economic data that was released, as well as, so far for the quarter to date, a better than anticipated corporate earnings season. The weak economic data ties into the Federal Reserve Chairwoman Janet Yellen's comments last week that the Fed will be taking a closer look at the inflation data and giving it more weight due to its recent weakness. And almost if on cue, data was released saying retail sales dropped for the second consecutive month, as well as the CPI was unchanged this month. In reaction to this, it raised speculation on the street if the Fed will be able to raise rates anymore this year. That's it for the market activity. Let's switch back to our fund flows data now. We'll start by taking a look at our fund macro groups. Equity mutual funds saw outflows of $1.8 billion last week. Taxable bond funds took in about $3 billion in net new money. Muni Bond funds, a slightly smaller net inflow for them, about $300 million, while money market funds saw $5.6 billion leave their coffers. Let's take a closer look and investigate each macro group now. We'll start with our equity funds again, starting with the mutual fund side of it. The $1.8 billion in net outflows was the fourth straight weekly outflow for the group. Once again, outflows dominated by the domestic equity funds. They saw $2.4 billion leave, while non-domestic equity funds took in roughly $590 million in net new money. If we break that down to the peer group level, for the domestic equity side, we see that the diversified equity group, they had net outflows of $1.8 billion. And on the non-domestic equity side, emerging market funds took in roughly $570 million in net new money. Let's move on to our equity ETF group now. We saw net outflows there as well. About $751 million left their coffers last week. Despite these outflows, the group is still on pace to shatter their previous record for annual net inflows, which was $154.6 billion in 2014. Currently, the group has net inflows of $144 billion. The ETFs, the equity ETFs, we're seeing an opposite trend of what we see in the equity mutual funds, in that both domestic equity funds and non-domestic equity funds are enjoying the net inflows so far this year. Domestic equity funds have positive flows of roughly $60 billion, while non-domestic approximately $80 billion. In this week's activity, the major movers were at the Spider S&P 500, saw roughly $3.6 billion leave their coffers. The iShares Russell 2000 product had net outflows of $1.4 billion, and the iShares Core S&P 500 took in about $2.7 billion in net new money. Let's move on to our taxable bond macro groups now, starting with the mutual funds. As mentioned previously, they had net inflows of $3 billion this week. The major players there were the Core Plus Bond Funds peer group, which had just over $730 million in net inflows. The Short Investment Grade Debt Funds peer group, which took in about $660 million in net new money. And the Multi-Sector Income Funds group had just over $400 million in net inflows. Moving on now, we'll look at the taxable bond ETF group. Positive flows there as well. They took in $4.6 billion in net new money last week. The inflows were driven by the high yield and the corporate debt rated BBB peer groups. If we look at the individual net inflows for ETFs, we see the Spider Bloomberg Barclays high yield product had net inflows of roughly $1 billion, and the iShares iBox investment grade corporate debt product took in just over $940 million in net new money. As the table indicates, on the outflow side, there wasn't any significant outflows attributed to any one individual ETF last week. Let's take a look at our Muni Bond Fund group now. Inflows there as well. $291 million overall for the week, driven by the high yield Muni Debt Funds peer group and the general Muni Debt Funds peer group, which had net inflows of $121 million and $88 million respectively. Our last group to take a look at this week is money market funds. Net outflows there again. For this group, they saw about $5.6 billion leave their coffers last week, driven by one peer group. The institutional U.S. government money market funds group had net outflows of almost $7 billion. Well, that wraps up this week's report. Please join us here again next week, where another one of our analysts will speak to you about that week's fund flows activity. And if you'd like to take a closer look at the data for yourself, please go to our website at www.lipperusfundflows.com.
All right, we're clear.
Okay.